Today's highlights: tariffs and regulatory pressure are hitting hard, reserves are at a new low, and major funds are increasing Bitcoin holdings. The $100,000 mark is now a critical line. The government shutdown is ending, Bitcoin plunged with $500 million in liquidations, and a death cross risk is near. Revenue hit $740 million, net profit soared, and USDC's market share is rising. Can it challenge USDT's dominance? With supported currencies returning, a new era of centralization is here. I'm Dong Dong. Let's look at the key crypto data from the past 24 hours, brought by NDXO. The headline, XO, an Australian exchange holding coins, stands out for its entry into Asia and focus on Asian users. It's especially user-friendly, eliminating many of the complicated KYC procedures. Plus, on NESO, you can use USDT directly to purchase stablecoins, tapping into the current market trend of financial value investment. Additionally, the central bank bond gap can be leveraged up to 20 times as collateral, allowing for sustained and efficient growth. So, scan the QR code at the top of the screen to get an orderly discount on transaction fees. And after the sponsorship period ends, we will hold a lottery together with Nexo, where you can win everything from USDT, Bitcoin, and Ethereum to channel merchandise, all in Bitcoin. In the past couple of days, there was finally a bit of an upward trend, but this morning, news from the US knocked it right back down. The price dropped from $106,000 to $101,800 in a short time, falling by more than 4%. The trend also looks particularly stifled. The main culprit, once again, is a few major moves from the US. US Treasury Secretary Yellen revealed in advance that in the next few days, an important tariff policy will be announced. As soon as the market heard this, it immediately got nervous, worried that global trade tensions might escalate again. And the chair of the US Senate Agriculture Committee mentioned that the Digital Asset Regulation Act is expected to move forward in early December. This shows that regulation of the crypto industry is really about to tighten up. The harshest move comes from US SEC Chairman Paul Atkins, who has introduced a token classification framework, planning to reclassify tokens according to the Howey test. He even added that cryptocurrencies can be part of an investment contract, but that doesn't mean they will always be considered securities. This sounds like they're giving you a sweet treat, but in reality, the next moment, they're asking you to pay up. Regulatory updates and policy news are coming in rapid succession, so of course capital is becoming more cautious. Bitcoin has been knocked back to hovering around the $100,000 mark. Right now, as long as Bitcoin can hold this psychological safety zone, it can still move sideways. But if it cannot hold, it will have to keep testing new lows. Next, it all depends on how US policy is actually implemented. In the past week, major holders with between 1,000 and 10,000 bitcoins have collectively net purchased over 45,000 bitcoins in one go. This is the second time they've increased their holdings since 2025, with the scale second only to that wave of extreme panic back in March. Back then, everyone was dumping their coins while the whales were quietly picking up chips. Now the same scenario is playing out again. Recently, Bitcoin dropped from $110,000 to around $100,000. The market has been hit by tariff policies, digital asset regulatory bills, and ETF net outflows, shattering sentiment and causing small investors to panic and flee, while the big players are buying more at these lower levels. It's as if they're specifically waiting to buy at these panic bottoms. History has also shown that whales usually start buying aggressively only at the tail end of panic. This was the case during 2022 pandemic and the 2023 banking crisis. Both times, those points became medium to long-term bottoms. Right now, Bitcoin is still hovering between $100,000 and $106,000. If the whales keep buying and exchange reserves keep dropping, then with this supply warning, prices could rise even further. Simply put, right now, the small players are fleeing, while the big players are taking over their positions. The market is quietly undergoing a low-level redistribution. As of November 12th, the on-chain data is giving a very straightforward signal. There are only 2.4 million bitcoins left on exchanges, which is a full 14% less than the 2.8 million at the beginning of the year, dropping directly to a multi-year low. What does this mean? There are fewer and fewer coins available for sale on the market, and the number of holders willing to dump their coins has also clearly decreased. History has already proven this before. At the end of 2022, when reserves dropped to 2.3 million, Bitcoin rebounded by over 150%. This kind of inventory bottoming is often the eve before a bull market. This round is a classic case of early players quietly positioning. Large amounts of Bitcoin are being withdrawn, moved to cold wallets or institutional custody, showing many have no intention of selling soon. In addition, ETF buying has remained steady, with institutions in the US and Asia continuing to accumulate, and over-the-counter transactions are happening rapidly. Right now, while retail investors are fearful, institutions are quietly buying up. In the short term, $100,000 is the psychological floor for Bitcoin. If exchange reserves continue to stay below 2.5 million coins and spot Bitcoin keeps seeing net outflows, it means the market is truly getting tighter and there's not much room left for the price to fall. Once macro capital returns to ETFs and they absorb more Bitcoin, a move to $110,000 is not a pump. With reserves dropping and ETFs entering the market, this feels like the setup before the next bull run. Please like and follow for the latest 24-hour updates on crypto, blockchain, and mining. Click the bell to join and become a member, and you'll get the members-only wealth code every Friday. Today, the US House votes on the temporary budget bill. They will hold the final vote. The White House says Trump is ready to sign immediately, eager to end the longest government shutdown in history. Everyone thought with the bad news over, the market would rise, but crypto delivered a harsh reality check. At 10 p.m. last night, Bitcoin plunged, hitting a low of $100,800 this morning, almost breaking the 100,000 mark. In 24 hours, total liquidations across the network soared to $534 million, with over 136,000 people forced out of the market. Many people are confused. If the government is about to restart, why is the market still crashing? Lately, that's just how Bitcoin is. It can't rise, but when it falls, it drops fast. Now everyone is asking, who is so aggressive and ruthless? Who is dumping Bitcoin so mercilessly without any sense of fair play?
Chris Kuiper, Director of Research at Fidelity Digital Assets, stated that Bitcoin's gains this year have lagged behind gold and the broader market, causing investors to lose patience and prompting long-term holders to slowly start taking profits. He pointed out that the current pullback in this bull run is not a sharp drop after reaching new highs, but rather a sustained and moderate downward trend during a period of sideways movement and slow gains.
Is the most interesting one other than AI out there, meaning the companies, the stocks that sold shares and then turned around and bought crypto with it. They're the marginal buyers in the crypto market lately. So what happens if they stop buying? What happens if they start?
Marcus Thielen, CEO of 10 Times Research, also pointed out that Bitcoin's gains this year are only about 10%. It has clearly lagged behind gold and tech stocks, causing some professional investors to lose patience. He further emphasized that $93,000 is a key technical level for Bitcoin. If this price is breached, the market could see a larger wave of stop-loss selling pressure.
When the government shuts down, SEC and CFTC reviews stop. The Federal Reserve also loses access to key economic data. Market uncertainty peaks, and technicals offer no help. Bitcoin has been knocked down several times after trying to break through $107,000, and now it's stuck moving around the $100,000 psychological level. Worse, the 50-day moving average is about to form a death cross. This is a signal that even technical analysts would frown at. Although, once the US government resumes operations and liquidity returns, Bitcoin still has a chance to rebound. But this market is showing us through its actions that things never go according to the script. Since the direction is unclear, we shouldn't force our way in. Trade less, lower leverage, set stop losses, and wait for the market to reveal its hand before making a move. USDT is still the big boss in the crypto world, large market cap, strong liquidity. But lately, USDC, the compliant honor student, has quietly caught up. This year, its market cap has surged by 59%, and the increased activity in on-chain DeFi has attracted a lot of smart institutional money. And right at this moment, Russia announced it would start using stablecoins for international settlements, which directly adds fuel to this USDT versus USDC showdown. The current landscape is like a ring match. USDT reigns supreme with its liquidity, while USDC is chipping away at its dominance with transparency and compliance. What's even more crucial is that the US Genius Act has already been implemented, meaning global stablecoins are about to face off under the same set of rules. And today, with SQL delivering such explosive results, this competition is about to get a whole lot more interesting.
In Q3 2025, Circle's revenue was $740 million, up 66% year over year. Net profit rose to $214 million, a 202% increase from last year, and earnings per share beat analysts' expectations. The core driver of this financial growth was the stablecoin USDC, whose average circulation nearly doubled, boosting reserve interest income. By the end of the period, USDC's circulation had reached $73.7 billion, with its market share rising to 29%. On-chain transaction volume surged by 680% to $9.6 trillion. The number of active wallets also increased, expanded simultaneously.
Looking at these strings of data, USDC has truly been on a tear lately. Not only is its scale growing rapidly, but on-chain activity and the entire ecosystem of users are all skyrocketing as well. It's no longer content to just be a stablecoin factory. It's now aiming for a much bigger stage. Its Layer 1 public chain, ARC blockchain, has already entered public beta, attracting over 100 fintech companies to participate. They've even openly discussed for the first time whether to issue a native token, clearly making a big push to energize their own ecosystem. Next, the question is, who will secure the regulatory green light in the US? Will it be the well-established, bold veteran USDT or the rule-abiding, ambitious top student USDC? This competition isn't just about returns, it's about who can earn treasury interest more steadily and attractively. In the end, the one who laughs last is the real winner.
Here, there are legends of getting rich overnight. There are also carefully crafted scams. This is a dark forest of chaotic development. Yet here, hope for a brighter future is also taking root. The destination of faith is freedom. The endpoint of consensus is equality. BitcoinTV. Let us guide you through the fog, glimpse the future, and gradually become wealthier together.
Stablecoins are sweeping Japan as financial giants fill the gap left by reduced central bank bond buying. Trading volume is up 20-fold. Tokens like x402 are soaring, and AI is set to disrupt payments as the new workforce. The Japanese stablecoin scene has been on fire lately. At the end of October, the first compliant yen stablecoin, JPYC, was just launched, and Japan's financial giants immediately rushed in en masse. The financial services agency, FSA, simply gave the green light all at once to the stablecoin projects of major banks like Mizuho and MUFG. This month, payment-grade stablecoins are about to be issued, and MUFG's Progmat platform is already set to join in right at this very moment. JPYC made a rather thought-provoking statement, saying that as the Bank of Japan reduces its government bond purchases, digital asset companies might just be able to fill that gap. The implication is clear: the Japanese stablecoin war has only just begun.
The core of this logic lies in the reserve structure of stablecoins. According to Japanese regulatory requirements, stablecoins must be backed 100% by fiat assets, and Japanese government bonds are a primary reserve option. JPYC has made it clear that 80% of issuance funds will be allocated to Japanese government bonds, with the remaining 20% deposited in banks, and that initial investments will focus on short-term bonds. This is highly aligned with current market demand.
I think stablecoins will eventually be much bigger than bank remittance networks. Hopefully, our company can help to improve the value of the Japanese yen and the overall Japanese economy.
The Bank of Japan currently holds about $7 trillion worth of government bonds, accounting for half of the nation's total. As it slows its pace of purchases, the market will need new buyers to absorb the additional supply. The report points out that as stablecoins expand into scenarios such as cross-border payments and corporate settlements, their reserve scale will continue to grow and may become a new and significant force in the Japanese government bond market.
For the government bond market, stablecoin companies entering can help ease pressure from the central bank buying less, preventing wild bond price swings. For the government, borrowing can also become more stable. For the stablecoin industry, buying government bonds complies with regulations, earns interest, and helps offset collected fees, allowing their business to continue sustainably. More importantly, it could change Japan's financial ecosystem, moving Japan away from cash, shifting towards digital payments. Ultimately, whether a win-win situation can be achieved still depends on whether stablecoins can become familiar and convenient enough for residents and businesses to use, truly integrating into everyday payments. Speaking of the hottest topic in the crypto world lately, the one word that has set the entire internet abuzz is definitely x402. It's insanely popular. The coin price has been skyrocketing, and on-chain trading volume has surged more than 20-fold in just 1 month. Those who missed out are frantically shouting in the comments saying, "If I don't check this soon, I'll bang my head against the wall." At first, many people were confused, asking, where did this x402 come from? It's a new protocol from the X402 Foundation, created by Coinbase and Cloudflare. On launch day, it set the market on fire. So what does it do? It lets AI spend money by itself. Before, if you wanted ChatGPT to buy data or open an API, you had to pay with your own card, and authorizing it was a hassle. But now that X402 is online, AI has directly become an on-chain worker. It can run its own business, take on jobs, make payments, and handle settlements all by itself. You don't have to do a thing. To put it simply, X402 isn't some concept that just popped up out of nowhere. It's about turning AI from just office software into an entity that suddenly has a wallet, has economic capabilities, can earn and spend money, and can act independently. That's the real reason why it's blown up the entire timeline.
The emergence of X402 stems from changes in AI usage scenarios. In the future, it won't be users themselves searching for information online, but rather AI handling it automatically. However, the traditional internet makes money through advertising, and if the main users become AIs that don't view ads, creators' revenue models will break down. The automated micropayment system proposed by X402 is precisely about establishing a new economic loop for the era where AIs pay for services. It enables AI to automatically pay for data services and computing power.
In the early 90s, while the browser was being developed, the 400 and 500 status codes were basically error codes. The 200 series were success codes. 402 is a very low number, meaning it was defined very early on because it was important to them to reserve that one for payment required. It was very clear to the people creating the internet that the most obvious way for a server to provide you with resources would be that you would pay directly for that resource.
The real-world implementation of X402 comes from the collaboration between Coinbase and Cloudflare. Coinbase integrates crypto payment logic into the underlying layer of HTTP, while Cloudflare already covers network infrastructure in over 120 countries. This ensures low latency and stability. One provides payment capabilities, the other offers a global channel, making them perfectly complementary.
Right now, the X402 ecosystem is really bustling, with more and more players joining in. Coinbase alone holds 70% of the market, and even PayAI and CatAI have jumped on board. Although it's still in the testing phase and many aspects haven't been fully refined yet. But this trend can't be contained. Its operation is straightforward. If an AI wants a resource, it asks the platform for a quote, specifies which token to pay, then signs the order, pays, and verifies on-chain. The resource is delivered instantly, and the process doesn't need any human intervention. For example, while an AI is running a task, it can spend 3 cents to buy a research report or 15 cents to call a data API. Creators earn money per use, and the AI can pull data whenever it wants. Both sides are happy. The most impressive part is that X402 essentially embeds payment functionality into the very foundation of the internet, allowing AIs in the future to work independently, pay for themselves, and run their own operations. The door to a new world has already been cracked open.
Trump fires back directly. He said that this government shutdown has cost the United States about $1.5 trillion, and that the real consequences might take several weeks or even months to fully calculate. He didn't forget to add a jab, saying that now the Democrats are really in trouble. The data came in early as usual. Yesterday, the U.S. spot SOL ETF saw an inflow of $18.1 million in one go, and BSOL drew in $12.5 million. Another $5.6 million came in, bringing the total to $369 million. To put it simply, the money is still pouring in like crazy. Official news from Seoul, Coinbase has added XPL and TON to its roadmap for the upper arm. The meaning is clear. These two coins have a chance to get locked in, just waiting for the next step. Approval granted. According to data from Clever Pool, Bitcoin adjusted its difficulty again on October 13th, this time decreasing by 2.37%, dropping to 152.27 tera, but the hash rate is still climbing. The champion has already reached 1.06 ZH per second, and miners' enthusiasm hasn't dropped at all. Wall Street regulatory agencies are about to start studying the token classification system. Simply put, they want to clarify which tokens can be approved and which should be restricted, and lay out the regulatory rules all at once.
Some things today don't need to be perfect. Some people don't need to understand either. The world is inherently imperfect. Leaving a bit of gap and regret actually gives our lives more texture. Rotten fruit will naturally fall from the tree. You don't need to pick it yourself. If you remember the wrongs others have done, heaven will sort it out. If you dislike someone, there's no need to fall out with them. If you can't manage a smile, then just stay silent. Time will gradually bring all the answers to the surface. Don't always try to control everything. Learn to accept ambiguity, accept the unknown. True strength is seeing the brokenness and moving past it. Keep living with a smile. The quieter a person is, the more strength they have. Elegance isn't something you can fake. It comes naturally from the moment you understand boundaries. If you get what I'm saying, please give a like. That's all for today's main content. Our channel, Crypto Love, Crypto Mining, and Valuable News Digest brings you news updates and in-depth reports. If you find value here, please share, follow, or become a member. Members get exclusive wealth codes from Monday to Friday. Let's grow our assets together in this bull market. See you again tomorrow.